As Proic Sam with this episode of the Live and Work and Abroad show. Thanks for joining us today. And today we're going to do a general uh, picture of the Cyprus tax regime for EU and UK expats, indeed expats around the world. This is the situation and the opportunity that Cyprus presents. Cyprus is one of a number of expat locations for expats living and working abroad. But whereas other countries like Spain and Portugal have rolled back on the incentives for expats to join them, Cyprus have started 2026 with liberalisation and a freedom and a raising of thresholds and reducing the taxes that people have to pay. So there's excellent opportunities for expats or non-expats, non-dom to Cyprus, to base their business, their property, their overseas property, their investments in Cyprus as a way of managing their affairs within the EU, giving them access to the whole of the EU, as well as in a broadly based English speaking, as well as Greek and other languages as well. So a very international place, lots of expats, a multicultural place with people from around the world, but easy access into Europe and to the UK and the Middle East. For more information and guidance, contact us at proactpartnership.com. I don't want to say and feature in this webinar the details about Cyprus tax, and so you can say this income tax here or that income tax there, because it all depends upon your circumstance. Cyprus have got a very robust non-dom scheme, which doesn't keep chopping and changing and doesn't depend upon this or that like the UK. It's very, very clear. If you're not from Cyprus and you've not lived in Cyprus, then you can come, become a tax resident, and then you can enjoy the non-dom privileges. Non-doms pay 0% dividend tax, 0% in tax on interest and savings, no capital gains, no inheritance tax, a personal income tax allowance up to £20,000, €22,000, and an additional 5,000 if you've got a personal a private pension. That private pension gives you an extra 5,000 personal allowance, and it only gets taxed at a maximum rate of 5%. Lots of different scenarios for those people. So you can come to Cyprus with 100,000 a year pension and pay 5% tax on that, and still work as a digital nomad, still work remotely, or own a property, rent it out. So all the taxes are reduced, all the allowances are expanded, and the flexibility is there for international business, property, and in lifestyle, living and working abroad in Cyprus. That's what we want to cover today. For more information guidance, contact us at proactpartnership.com. But the next level is how you hold the assets. Now, what if you're the UK government in the November Halloween budget, November 24, changed the rules for non-doms, and the idea there was to capture expats living and working in the UK into capital gains, inheritance taxes, income taxes, and dividend taxes sooner, before you could manage and have a very low tax way of life in the UK for 15 years. But that's been obliterated. Cyprus have reinforced that and expanded it. But at the same time as they did that, to capture and trap the expats in the UK, they also allowed a British person to invest abroad, to relocate overseas, and to run their business or invest in property outside the UK and start to avoid the traumas of 40% inheritance tax when you die. Double whammy that by introducing 40% on your pension fund as an inheritance tax. So there's even more incentive now. You're taxed on your income, you're taxed on your savings in the UK, Property rental tax has gone up, dividend taxes have gone up, and also you get inheritance tax. That's not gone up. It's still 40%, but it's now in your pension fund as well as your property and your investments. Everything that you build up is taxed. And when you earn it, when you save it, and when you die or when you sell it, all those things can be avoided in Cyprus. And ProAct know how. So contact us and find out more. So let's have a look about that. And I want to look at it from two perspectives. And I want to start with the first place. Now, for those of you that read Kafka, one of his famous sayings is the purpose of life is death. So let's start at the end. If you're born, you are going to die at some point, and we all wish and long for a long and happy life. But if you look at when you die, what happens to your affairs? Well, they pass to your family and friends. There's a set of laws in every country, including Cyprus. Cyprus is a UK-based law, English law, so is the UK. And in the UK, there's a prescribed way and share of distribution of assets if you die without a will. Now, expats can have a will in Cyprus. Cypriots can't. So they have Cypriots have forced heirship, where they have to leave it to children and spouse. The UK don't have that, but if there's no will, it goes down this pattern of spouse and children. For more information and guidance, you can contact us at proactpartnership.com. So the first advice is always to make a will, but a will then involves probate. And that's another set of expenses. If you've got very small pensions and savings and bank accounts, death certificates can settle your assets in the UK without probate. Even so, probate can be quite harmless, but it does involve an inheritance tax return. And if your estate is worth more than £325,000 on your property, investments, your pension, then inheritance tax cuts in. So how can you avoid that? When you're living and working abroad, there's a number of different opportunities that arise for you. Cyprus doesn't have any inheritance tax. Cyprus doesn't have any capital gains tax other than real estate in Cyprus. So only when you sell, if you buy a property in Cyprus, you sell it to a third party, and then you get a capital gains tax, which is index linked, inflation linked, like it used to be in the UK until the period of the last 25 years when the government started closing the net and taxing you even more. So how do you avoid that? Well, you don't need to own the asset to enjoy it. If you own an overseas property and you want to generate that income from that and enjoy that, that's absolutely fine. But if you invest in a pension portfolio of shares and stocks or an investment fund or an ISA, you don't own the company. You just enjoy the income that company pays you. So there are ways to own assets to receive income without having your name above the door. And this is where Cyprus English-based legal system allows you to benefit, as well as being a low tax country. So what you can do is avoid the cost and delay of probate in Cyprus. When you have a will, you go through a probate process and you end up with a family estate and a trust that is then distributed to everybody. But why not put it in a trust beforehand? This is what you do in the UK. If somebody became elderly, disabled, it needed to take care, the money gets taken and put in a trust to look after them, which is great. So it's good at a lifestyle basis, but it can also be used for tax planning. And how do we do that? Well, ProAct know how. Contact us at proactpartnership.com. If you don't sell the property, you don't pay capital gains tax. If your trust owns the property and the trust doesn't sell the property, there's no capital gains tax. If the trust owns the property and you die and you want to leave the property to your children, the trust still owns the property. The children can have property, there's no transfer, there's no inheritance tax return or calculation. When you put money into a trust, there's no stamp duty, there's no transfer taxes, there's no capital gains assessment. You can put the assets in there and hold them there without any liability to tax and without having to go through a probate process which can generate plenty of taxes, plenty of expenses and duties and fees and expenses. If you don't need to sell the property and transfer it, you save that conveyance and that estate agent expense. The trust can own the property, you can enjoy living in it, you can enjoy the income from it during your lifetime, but you're creating your own investment fund. You're not going to an investment company, you're not going to an ISA company with its own investment funds, you're not going to a pension company with its investment funds. All pensions are trusts, by the way, so it's just an extension of that, except that your family controls it, and therefore you don't need to bother with probate and death. You don't need to bother with selling to third parties. You can manage the assets within the trust. And in Cyprus, that means you can effectively, as a non-domicile, avoid liabilities on tax. Now, if you rent a property in the UK or Cyprus, you can have a tax liability, and that's clear. What we're talking about here is avoiding 24% capital gains tax in the UK on investment properties and 20% in the UK on any property. So if you buy a property in Cyprus and you sell it because you need to go home because you're in England, you're losing your health and you want to go home to England or another country, there's a 20% capital gains tax. If you leave the property in trust and don't sell it, just pass it to your children, there's no capital gains tax and there's no conveyance cost. The family owns the family trust of business, property and investment assets. And that way you avoid the legal fees, you avoid the cost and delay of probate overseas, and it allows you to progress and pursue your interests. And instead of a probate taking 1 or 2 years, it can take 2 weeks. For more information and guidance, contact us at proactpartnership.com. If an expat owns property in the UK, a rental property, they can give that without stamp duty as well, as long as there's no financial consideration. So an expat living in Cyprus or around the world, in the Middle East or what have you, with UK rental property, trying to manage that asset and avoid capital gains tax on sales or additional direct taxes, then what you'll do is you'll just put it in the trust. There's no stamp duty for that gift into trust, or there can be no stamp duty for that gift into trust, as long as no money changes hands. That's the key thing. So your family gifts your property into trust, no stamp duty, and you can plan to not pay any tax in the future and avoid inheritance tax assessments when one of you die or loses your health or wants to give it up. For more information and guidance on how to save stamp duty, transfer taxes, probate fees and conveyance fees for your family's investments in property, business and overseas and in the UK, contact us at proactpartnership.com. Now, with all the liberalisation in Cyprus in terms of raising thresholds and allowances, that's actually a double-edged sword. All the countries around the world are following the OECD instructions to become tax compliant, Pillar 2 regulations for the precise definition of what's going on. But it's the same in the UK, Cyprus and around the world. Each country jurisdiction has a single central login. So in the UK it's .gov.uk, in Cyprus it's .gov.cy. So government's having one portal to log in for all your investments. And or not all your investments, all your tax affairs. So your social insurance, your national insurance, your income tax, your VAT, your business tax, your property rental tax, your local authority taxes, all will be under the same domain. That means they don't have to bother about data sharing regulations because it's all there in one place, and that allows, under international tax rules, governments to share data. Everybody has to have a tax number. So in the UK, you have a tax number. It could be your national insurance number or something else. You come to live in Cyprus, and you can get a resident permit. But once you've got a resident permit, there's a next stage. You can have a residence permit just to visit, and as long as you keep your visit to an EU state or Cyprus below 90 days, that's fine. So the Schengen zone rules of the EU, you stay 90 days in any 6 months and generally don't become a tax resident in any year. Okay, but in Cyprus, the sorry, if you want to become resident in any one country like Cyprus in the EU, you then have to have a tax number. Okay, and as a resident, so staying more than 90 days, you started to become a resident. So staying more than 183 days, you definitely are a resident. Once you change your tax residence, it remains at that new country until you change it to something else. So once you become a Cyprus tax resident, it will remain Cyprus tax resident. Even if you're a nomad traveling around the world, you can still stay Cyprus based. That's the key. Still stay Cyprus based, even though you're traveling from your Cyprus residency. But you need accommodation. That could be rental or it could be purchased. You can be mobile and flexible, but you can still travel from Cyprus to go where you want around the world. Cyprus is an island, but it's also part of the continent of Europe. There is a ferry service into Europe, either via Turkey or Greece, as well as international airports. So you can get around Europe. That's not a problem. When you're an expat coming to Cyprus, you're considered to be non-dom, and what you can do then is a number of different things. If you want to work within Cyprus and you've got that permit to do so as an EU citizen or family member, then there's ways you could get up to 50% off income tax for 15 years, meaning a maximum income tax rate of 17.5%. If you're running a business and you've got control of the business, a corporation tax in Cyprus, it has gone up to conform with the international standards with OECD to 15%, but that 15% is all that you'll pay. After the 15%, you pay yourself dividends, which is 0% tax, or if you use a capital sum and lend that to the company to create it, you can receive that interest tax-free as well. We talk about personal service companies here. If you want to get into payroll services and investing in Cyprus companies, that's something different. But again, it's possible to do that, to accelerate that. Generally, you need to show you've got income to live over in Cyprus. But if you're investing in property, you can do that anyway. And the property can be your base for a residential income. But whether you've got a residence, a property, an investment, or a business in Cyprus, you need to have that tax number. The tax number will give the exchange of information with your home country for where you are. Expats will pay a maximum of 5% on pensions, 0% on dividends, 0% on interest, and you can earn £20,000, €22,000 without an income tax liability. There are some other taxes in Cyprus. There's what they call a health tax. Doesn't qualify you for GESI, for the health system here, but what it does qualify you for is to be tax legal. So generally on your worldwide income, you've got this a tax called a GESI tax to pay on your worldwide income, which is a maximum 2.5%, 2.6%. not a maximum. It generally 2.65%. There's some lower rates and higher rates, but that's just to confuse you. Just assume it'd be around 2.65%. So there's that little bit of a tax there. If you're running a personal service company, um, your salaries can be and expenses can be discounted from the corporation tax bill. So become quite efficient how you do that. Everybody in Cyprus needs to do a tax return each year between the ages of 25 and 70. Now, that's not absolutely true. What we're saying there is that if you're a retired pensioner and you've got next to no income, your income is below 20,000, then you haven't got an obligation to do a tax return. But if you're over 70 and you've got rentals, dividends, pension income, or any other taxable income from anywhere around the world, then you do have to do a tax return. So uh, low earning Cypriots over 70 may not need to do that tax return, but everybody else will. Now, given on the basis that if you're an expat living and working in Cyprus, whether you're retired or working, they're looking for you to have an income of around about €2,000 a month. So it takes you into taxable income straight away. So the minimum income you need to come and relocate here just takes you above the threshold where you're going to have a little bit of income tax to pay. So you need to do that report. So generally, you need to assume every adult needs to do a tax return. It's over the age of 25, but that's because the majority of the Cypriots go through a higher education. So it's giving you a chance to do that higher education and national service as a young adult before you get the obligation to do the tax return as well. That's our summary for today. Cyprus is an EU country which gives you access to the whole of the EU, gives you access to 0% tax for expats. It's got a robust and reinforced non-dom status, but rather than just depending upon the individual tax rules, you can create your family investment portfolio using your business, property, and, and income assets to create a tax-free home for your money, even if you don't come and live in Cyprus. So if you're just investing in property, that's your tax base for Cyprus. Your pension fund, come to Cyprus, draw your pension fund, pay 5% tax, and reinvest the money, or start a personal service company from Cyprus. UK expats don't automatically get a right to take a job in Cyprus, but it doesn't stop you working remotely and enjoying the tax benefits. For more information and guidance, contact us at propartnership.com.